hello everyone, and welcome to Steppe Gold's live investment summit today, hosted by Six. We are joined today by Anil Warwick, Executive Vice President, Jeremy South, Senior Vice President and Chief Financial Officer, and Greg Wood, Chief Operating Officer. The team is going to walk us through a company presentation, and after our presenters will be accepting questions live. So as a reminder, you can submit your question at any time on the Q&A panel on the right-hand side of the screen. We'll be sure to get to them after the presentation. And as always, the summit is being recorded and will be available to watch afterwards on Six.com. But without any further ado, I'll hand it over to you and Neil to kick things off.
Great. Thanks very much, Dasha, and thank you everyone for joining this fall update. Our last update was in August, and obviously a lot has happened in the company since then, and what we think considered to be quite positive. Today's news release came out on our feasibility study for our expansion into phase 2, so we'll get into those numbers and obviously open to a lot of questions where we can clarify and talk about the significant upside we have going into phase 2 based on this base case where there's a lot of optimization and growth opportunities. For a refresher for those who may be new to the story or newer to the story, Steppe Gold is traded on the main board of the Toronto Stock Exchange. We listed in May 2018. We're also trading on the OTCQX and the Frankfurt exchanges as well. We currently have just under 70 million shares outstanding, a market cap as a producer that might be fairly undervalued, and now coming out with our phase 2 expansion and our numbers there, where expansion has already started. Certainly have a lot of room to grow in the markets. We have a lot of good support from within Mongolia, and we have some brand name sophisticated investors, including Eric Sprott, Fidelity International, Elliott Management, and Triple Flag, to name a few. As a reminder, we are in our phase 1 production. This is a heap leach operation that we brought online in April 2020. So we successfully brought this production online in a very tough environment. This is our heap leach operation, which is now expanding to our phase 2, which is the fresh ore and transitional ores underneath the oxides, which go to about 40 meters, so from surface down to 40 meters. So a quick timeline of how we got here, when we got here, and where we're going. End of 2016, we were a private company with no assets, with the aspirations of building Mongolia's premier precious metals company. 2017, we acquired our 2 assets, with ATO being our flagship asset and cornerstone for the company. The ATO project we purchased for $20 million US from Steppe Gold. And in 2018, we listed the company, raising 25 million Canadian, as the only IPO in the mining space in 2018. From 2018 to 2020, we successfully built our first mine, our phase 1 heap leach operation, and we brought it online in April 2020, announcing commercial production in July 2020. February of this year, while bringing production online, with limited resources, we focused on infill and extensional drilling and essentially moved 1.2 million ounces to 2.45 million ounces. That's still growing at depth and along the strike to the north. So certainly doubled our resource, which allowed us to have a strong base going into phase 2. With the feasibility numbers coming out this morning, we now have enough ounces to start essentially a 12.5-year mine life on a go-forward basis, which includes 2 years of oxides and then 10.5 years of fresh ore production, which we believe will continue to grow in terms of life of mine, and a lot of opportunities to grow that production profile to closer to 125 to 150,000 ounces a year, currently at about 100,000 ounces on gold equivalent production, as we bring that online in about 2 years from now. So we have cash flow production for the next 2 years from the oxide mine. We have expansion. As we announced, we know what the CapEx looks like. We know what the production cost will look like. And certainly we're doubling our production profile in very short order, with a meaningful life of mine and a lot of optimization through resource conversions, additional drilling, focusing on bringing more of the Mung deposit into the mine plan, and of course, through optimization with power and whatnot, which we'll get into later. Just the update from the resource update earlier this year. We successfully brought on, over 20 million ounces of silver into the measured and indicated. We have about 1.4 million ounces of gold as well. So a very strong base that we can continue to grow this company. The second asset we hold today is a exploration license, a very exciting exploration license in the southwest of the country called the Udimhundi project, UK project for short. This is a 14,400 hectare exploration license that is yet to be drilled. So it's a very exciting project where our neighbors, Erdene Resources, have had a lot of success recently, even with new discoveries. So it's a license that's been undrilled, but has had drilling all around. And we have 4 discoveries we'd love to drill this year, and the chances are we'll probably have to start in Q2 of the new year. But a very exciting project. It could be another production center down the road. So we do offer cash flow expansion of that production and exploration sizzle and upside on both of our properties. So it's a nice position to be in, to have self-funded exploration going forward. I'm just going to hand this over to Greg, Chief Operating Officer, who's currently in Mongolia. And I want to thank Greg and Jeremy for waking up at 4 a.m. To present to our investors and take the questions. Obviously, it's very important based on the news we put out today to give everyone an update of what's going on today, where we're going in the near future, and what it means for the company and how positive this news is, and actually what we've actually accomplished in the last few months. So, Greg, please go ahead.
Thanks, Anil. Morning, everyone. This first slide here just gives us a snapshot on where we stand today in terms of mining. Just a little bit of background. Project to date, we've actually mined 2.2 million tonnes, and we've stacked over 1.3 million tonnes onto the leach pad. This year, currently the ROM pad is sitting at 616,138,000 tonnes of ore, which we aim to expedite onto the ROM pad. The mining for the last few months, we've mined 242,000 tonnes of ore, all from ATO 4. And the blast and the reconciliation we have seen from ATO 4 have been significantly higher than previous estimates, and the grade from those 257,000 tonnes of 2.06 grams per tonne, all out of ATO 4. So from the crushing and the leach pad, we finished stacking onto Cell 3. Cell 3 now contains over 510,000 tonnes of ore at about 1.9 grams per tonne, which is completely new ore, unleached, and will be ready for leaching come the new year, which will put us in good stead for 2022 production. All the winterization on the leach pad has all been complete. We're ready for the winter come in for Mongolia. Yep, and so the stacking on Cell 4 has commenced, and we're currently constructing a new crusher at the site, which will give us the ability to crush close to 1,000 tonnes a day, which will allow us to get the 616,000 tonnes from the ROM pad onto the leach pad in very quick time.
Thanks everyone for joining. Thanks, Greg. Everyone's seen the announcement. I'll just go through some of the highlights. I won't read the slides. But this has been a feasibility study a year or two in the making, and really supported by DRA Global, one of the largest engineering firms. It's certainly been a journey through COVID. Doing a feasibility study during a pandemic has certainly had its challenges, but and it's certainly slowed us down a little bit. We've got to the finish line, and we're certainly pleased with the study. We certainly, as Neil mentioned, we see the study as a baseline with lots of optimization already underway. It's a 12.5-year mine life with an assumed start date of January 1, and essentially combines the 2 years of oxides and 10.5 years of mine life from the fresh rock and transition. Based on a revised reserve calculations, we had very limited reserves when we went public, and up until recently, we now have 26.4 million tonnes at a gold equivalent grade of 1.86 grams per tonne. There's virtually no inclusion of Mong in this reserve. About 1 million tonnes of that 26 million tonnes is from Mong. So that's still to be converted to reserve. Mong is a deeper deposit, and we are going to need to do more work to identify how to economically mine that deposit. So it incorporates 2 full years of oxide production. That 100,000 essentially will be split probably into 60 and 40, but we also think there's more to go. Although the reserve calculation we think is reasonably conservative, with a cut-off grade of 0.4, certainly the grade reconciliation we've seen and continue to see on ATO 1 and ATO 4 is roughly 40% higher than initially estimated. That will bring the oxide to around about 140,000 ounces of total production when the reserves 4 years ago were at 150,000 at a 1.25 gram per ton grade. So it remains to be seen whether we can get more ore, but we're certainly optimistic. The fresh rock phase, 10.5 years with 23.5 million tonnes at a gold equivalent grade of 1.93. Again, showing very robust economics. We think conservative payability, and we look to improve on that. One of the benefits of our location, we sit about 150 kilometres from the Chinese border, and one of the main border crossings for concentrate into China. We enjoy a very attractive location for shipping concentrates across the border. And in fact, there's a Chinese mine about 40 kilometres away that has a very similar project to ours, and they're shipping very similar concentrates. Rapid payback of capital. It's actually really a 1-year payback if you look at the timing of it, because we are producing and expected to be producing over the next 2 years. Once we have our reagents in the country, hopefully soon. The project's essentially paid back on a net basis in 2024, which is essentially year 1 of the project. So that's pretty attractive. The site all-in sustaining costs of $853. Builds in we think is a very conservative and we think overstated probably TCRC. Using benchmark costs, which are significantly higher than spot right now. We're optimistic we can improve on that, and it also doesn't take account of the likely power savings that we'll have through the use of grid power, which is already underway. We were unable to include that in the study because the work hadn't been done. So the feasibility study incorporates a full diesel genset power solution. Next slide, please. Oxide production Q1 2022 planned resumption. 60,000 ounces, as Greg says. We have 40,000 ounces of recovered. That's at a 70% recovery. So we'll be pushing to 45,000 ounces towards the end of December here, which will certainly underpin that 60,000 ounces in 2022. As I say, we feel that the 100,000 ounces estimate is conservative, and that's at an all-in sustaining cost of about $639 per ounce. That 100,000 ounces. Fixed crusher is being installed. We're at that for 6 months. It's a pretty significant unit. Again, it supports the phase 2. It also accelerates and triples our crushing capacity on phase 1. So that puts us in good stead, and that will allow us to stack on an accelerated basis through the end of 2023. We are at some advanced stages with lenders, and we're hoping to have something to say to the market in the next few weeks on that. And that should underpin our comfort level around this phase 2 expansion. And as Anil mentioned, we will continue to drill and interpret. The resource estimate. There's at least 15 million tons behind over 7 million at Mong and another 8 million tonnes that have been excluded from this reserve estimate. So we continue to work on that. Next slide, please. And just some of the headline metrics. I think everyone's hopefully seen these already. 232 million after tax, NPV at 5%. Our market cap's around 70. I think it's a reasonable, as a producer, it's reasonable to compare those two numbers. So we're still sort of scratching our heads a little bit at our share price, but we can only deliver what we can. So after tax IRR 67%. That's obviously extremely high, much higher than most other studies. That probably owes more to the fact that we're a producer. So the payback is quick, and that reflects in the IRR. Site-based AISC in these inflationary environments, I think it's still a pretty competitive all-in sustaining cost, and EBITDA, approaching $600 million over the next 12 years. This is obviously all in US dollars, a 3-year payback, but really we're paid back in the first year of fresh rock production. CapEx of 128, we think has been done with a reasonable amount of fat in it, which I think is conservative and appropriate. And we'll touch on that a little bit later. The grades are there, and total gross revenue 1.72 billion. Next slide, please. These are just the cross sections on ATO. We don't know whether these two deposits are joined, but certainly the Mong chart does show you that this is a deeper deposit, very high grade, lots of silver. Mong means silver in Mongolian, and so we're looking forward to doing more work and seeing if we can to get an economic reserve out of this. Next slide, please. That's just another cross section. This is the reserve table. I won't speak to that in detail, but I think everyone could see the numbers there that I've been talking to earlier. Next slide, please. This is the production schedule. The gold equivalent line does show that this is a bit of a front-end loaded mine. We do around 106,000 ounces in years 1 through 5. That's 2024 to 2028, and then dropping to sort of in the high 70s, for an overall 92,000 ounces equivalent, gold equivalent per annum over the 10-year fresh rock. Greg, maybe you want to talk a little bit just to the site plan?
Sure. So the site plan there, we can see that all the grey areas there are the existing leach pad operation. You can see the leach pad, the existing crushing area. The pink building is the current ADR building, and we can see the pregnant barren pond and the stormwater pond at the top of the screen there. The other coloured items are the phase 2 items. We can see the phase 2 crushing circuit, which is currently under construction. We're hoping to have that operational first quarter 2022. And as mentioned before, that really gives us the ability to ramp up our current stacking rates on the leach pad operation, and will then obviously increase production for 2022 based on those increased stacking rates. We can also see there in the blue, which will be the genset power station, and then we go down into the new facilities for the new building, which we're hoping to break ground next year. It's just a side view of what the new facilities will look like. Going from we can see there see there the conveyor belt, which is coming up, which will come up directly from the new stockpile area from the new crusher into the milling area, and then flow through the plant, and then obviously finish at the concentrate loadout area. What's the construction schedule? Sure. So as we mentioned before, we're actually under phase 2 construction. Effectively has already commenced with the expansion of the reagent facilities, and also with the construction of the new crusher. Process building Q4 2022. Tailings dam with Mike Pizol will commence also in 2022, and we can see the first concentrate produced Q4 2023.
Okay, just on CapEx, won't go this in detail, but once the study's formally filed in a week or two here, people can get a look at this in more detail. But obviously most of the capex comes through the process plant, the equipment, and the building of that building that'll be containing the equipment. We benefit from having lots of options, lots of very high quality options, very close to us in China with equipment. The equipment company that we use to build our ADR plant will probably use either that company or someone like it. So and that's the other thing I think we talked a bit about in the beginning, and Neil talked on. A lot of the infrastructure is already done. This is not a greenfield project. We're not starting from scratch. We have infrastructure, we have roads, we have water, we have a camp. We've made lots of mistakes. We've learned from our mistakes, and so we really are an expansion project. And I think that really does take a lot of risk out of this, and that really has flowed through to the capex. Our ability to get quotes. We're not going to suppliers we haven't used before. We're going to people that we already deal with every day, and so that I think is really important to note. When people are assessing our ability to hit this number, we think we'll beat it, and we think we'll beat it by some margin. We've done it before. We built the ADR. We built the first phase for around 25 million, and that was probably 25% of what some people were estimating we'd need to spend to build it. So we've shown we can do this before, and a combination of outsourcing and our own in-house expertise. In Mongolia, and we had a lot of discussions with our engineering consultants over the last year about the cost of Mongolia, and I think we've certainly been the building in Mongolia using the Chinese equipment nearby. Certainly is significantly, generally more efficient and more cost effective than even places like Kazakhstan that are right next door here. The tailings facility, again, Knight Piésold, probably the best in the world. This and we've worked with them before. They were involved with phase one. So again, we're working with people that we know. We're not doing this for the first time. The power plant distribution is basically a 30% down payment on the gen sets. We'll have about eight gen sets. Gen sets are reasonably inexpensive here. The Caterpillar has a major operation here. Remember, Mongolia is a big mining country. There's a lot of projects in this country. So again, the infrastructure here is very good. The indirect costs, again, a combination of our own people, and we expect to be going up to 500-600 people, I would think, with this project, up from the current 250 we have now. So we're able to use both consultants and our own people, and we are using a blend of both Western consultants and Mongolian consultants. There is a good body of engineering brain power in Mongolia now, and with some good experience and some success stories. And owner's costs also reflects, we think, that our ability to really run this project, ourselves in large part. Not sure what happened to the OPEX slide there, but we're at $25.6 dollars per ton of ore. We think this is a very attractive cost, and that's what really flows through to the cash cost. Certainly other projects I've seen in this country are significantly higher cost per ton, and this compares favourably to the phase one as well. Just in terms of the revenue split over the next 12.5 years, what you can see here is, I think we've talked a bit about, we are producing this is a flotation only plant right now. We have decided not to go with a cyanide in leach or a CIP. we recover about 79% of the gold through the flotation only of 3 concentrates: a zinc, a lead, and a pyrite. Most of the gold comes out through the lead. As you can see here, 45% of our revenues comes from the lead concentrate, but 63% of our overall revenues come from gold. So you can certainly see that lead is the dominant recovery there. Zinc sort of follows shortly behind, and pyrite is our highest tonnage, but is our lowest gold recovery. So the work we did on the study, we didn't get to the end point on the recovery of the rest of the gold. We think we can get another 10% conservatively through a cyanide and leach operation or a CIP. That can be added reasonably easily. This is a really modular project, and I think if we do find more, if we are able to convert more resources to reserves, and we have more gold as we go through, and we're confident we can find more in this area, then we would obviously come back and do another study and update that study, and bring more of those resources into reserves, hopefully, and that may alter the decision and the timing of the CIP option. Okay, and just on the revenue, there's the lead concentrate, so the zinc concentrate is actually a reasonably valuable component of it as well. This is just the gross revenue chart, which is again reflects we think conservative transport costs. Transport costs for us, we think, could come down just given where we're located. We'll probably sell through traders. There is an active market and trading concentrates in Mongolia into China. So again, we're not doing this for the first time. There's a well-established trade route from our location into China, and given the Ulan mine, that's about 40 kilometres away from us. That's all I had for my prepared remarks. Back to you, Anil.
Thanks, Jeremy. Thanks, Greg, and thank you, everyone. So as the overview here, obviously the feasibility study is the focus of the call today, to obviously give an update on phase 1 as well as what's going on now with phase 2. We have a robust project, strong economics that we can now build on, and as Jeremy and Greg mentioned, we've already started. So this isn't a feasibility study that we release and then we'll spend a couple of years trying to line up financing and permitting and all of that. This is something that we release and has already started, and barring no unforeseen further delays in the global supply chain issues and anything that we can't control, this should be online in about 2 years' time. So very exciting to be able to produce from surface, generate a lot of cash flow from our operating mine with the heap leach, and being able to double our production profile in about 2 years with a lot of room for growth from a production profile basis and a life of mine extension. So a very good position to be in. With that, we can open up the questions. Dasha.
Yeah, great. Thank you so much. So now we'll head into the live Q&A. So if you do have a question, feel free to submit them now. But Neil, we have a question for you. So investors see a lot of feasibility studies come out, and often no difference operationally for years, which usually means no shareholder value upside in the short term. Are you confident that the upside on this will directly correlate to the current phase 2 expansions and anticipated production? And more importantly, will this lead to more raising of cash that could lead to dilution?
Yeah, no, that's good. It's a good question. Usually when people release a feasibility study, then that what's next is there's capital raising, and that needs to be done both on equity and debt side. So we have the luxury of, as I just mentioned, that we're already operating. We already have infrastructure. This is a seamless expansion, not a new build, a greenfield. So there's a lot more optimization opportunities as we move to bring that production online, because we're already in production, or we'll be back in production imminently when we deal with our reagents supply chain issues in short order. So that's a big difference from other feasibility studies that are new builds. They have to continue to raise capital to pay just normal bills corporately, while advancing talks to finance the development and construction of their projects. we've already constructed a project and now we're expanding on it. So we are large shareholders and have always been large shareholders of a company. So we're very mindful of equity dilution. We don't want to raise capital at levels that are low like today, and we believe we are much more valuable today than we were a year ago, even when we traded at multiples of where we're trading today. So certainly on the equity side, we have the luxury of waiting. And waiting for two things. One, cash flow. Cash flow can contribute to our equity contribution for this project. Will it cover it all? It could. Will it? We don't, it's a little bit too early to say. So we have the luxury of using that cash flow to fill in the equity component as we build this project over the next 18 to 24 months. On the debt side, we've been very busy advancing debt conversations with both local banks and international lenders. So this is not something that we just start the process now. As Jeremy mentioned, within a few weeks, we should have an update on where we're progressing on our first tranche of debt capital, which would fund essentially the first year of CapEx. So we're in a stronger position, I think, than most, based on the release of today's news, where we'll do everything we can to minimize dilution from the equity side. If we don't need to raise equity, we're not going to certainly just do it for the sake of raising it and diluting ourselves and our partners who are investors. So hopefully that answers the question.
Yeah, great. Thank you so much. So we have a bunch of questions here. Rod is asking, do the FS numbers take into account the stream?
Yes. Yeah, they do. So, we have a stream. Just so people understand the stream, it's a 46,000 ounce, mostly gold. There is a stream on silver, but silver is a pretty small component of our project. 25% of our gold, this is all now financial, 25% of our gold goes triple flag up to 46,000 ounces. So we're up at about 11 or 12 right now. And then there's an annual cap of 71.25, and we sell the gold at 17% of spot. So essentially 83% of the stream sold. So that, it has a material impact on our revenue, obviously, over 12 and a half years.
But it does, I guess, to Jeremy's note there, it includes a stream, but the stream drops off significantly as we get to our milestone payment of 46 milestone delivery of 46,000 ounces of gold. So instead of 25% of production, it'll drop to a maximum of 7,025 ounces.
Great, thank you. Our next question is from Albert, who is asking, what is the after-tax NPV at 1,800 gold?
It's about $285 million at 1,800 gold.
Great.
So it goes up from 232 to about 285.
Thank you.
We will have some sensitivities in the study.
All right. Our next question here is from Ron. He's asking, the resource is 2.4 million ounces, but the reserves are only approximately 1 million. Why is that the case, that only 50% are mineable, and is there any expectation?
As I mentioned, Mong is not included. So that's, if you look at do it by tonnage, I think on a gold equivalent basis, the reserve is about 1.4 million ounces. So it's not 50%, but as I say, about 7 million tons of Mong is not included, and the balance of about 8 million tons is reserves, is resource at ATO, and that's outside the pit shell or all that is not considered to be economic at the cut-off grades applied.
Thank you.
And we're hopeful of being able to bring more of that in, but we're obviously, these studies are done by independent parties, and we can only work with what we've got.
Great, thanks. Our next question is from Ryan. He's asking, what is the expected strip ratio of the sulfide operation?
2.6.
Great, thank you so much. Our next question is a strong US dollar a positive or a negative for your financial results?
It's a good question. Obviously, we sell our product in US dollars. Gold is quoted in US dollars. Most of our costs are in mean, they're calculated. A lot of them are calculated in US dollars, but we pay them in Mongolian tuggerog. Yeah. So, yeah, I don't know. It's a hard question to answer. I don't, and the Mongolian currency has been relatively stable to the US currency of late. There's normally about a 5% inflation in that currency, but we haven't seen that of late. I mean, I would say that, as a general comment, that most of our services and our equipment we pay them in tuggerog, but they're quoted in US dollars. So, we have a sort of a natural hedge, really.
Thank you. Harry is asking, are you able to sell concentrate into Mongolia, or do they have to? Do they need a smelter capacity, or do you envision exporting it to Russia or China?
Yeah, there's no smelting capacity for concentrates in Mongolia. It all goes to China. China has some incredibly high percentage of the world's smelting capacity. The smelters aren't super close to the border. Most of the smelters in China are on the eastern seaboard, but there are some that are reasonably close that we will use up in western China. So, we will unlikely sell concentrates to Russia, but that is an option. We are close to the Russian border as well. As I mentioned, we'll be producing around 100,000 tons of concentrate a year. So that's quite a lot of concentrate, but it's probably not enough for us to go direct to a smelter. So we'll probably go through one of the large traders, and some of the large international traders are very active in Mongolia, such as Noble and Trafigura. So there's these are well-established supply chains, and we'll be benefiting from that. We're not putting this on a ship and sending it 10,000 miles. We're moving this a relatively short distance.
Thank you. There's some questions here about the reagent delays. Maybe you can provide more color onto that and what the future looks like for the supply.
I think we're optimistic, but I think the problems have been in China, and they continue to cause us issues. I think we are building up our inventory, as Greg and Anil have mentioned. Even just looking at cell 3, 500,000 tons at 2 grams. I mean, we're very confident. We're banking this. It's been a very frustrating year. Lots of sleepless nights over this, but we're optimistic. We have now 3. We've developed 3 options to source this. We are coming into the winter, so we might not leach in any event. We may not leach until the early new year, but we have our boiler house operational, so we do have the option of being able to leach through the winter. Should we get cyanide shortly? Do you want to add to that, Neil?
Yeah. So I think mute your microphone, Jeremy. Just back there. So I think what we've learned, obviously, in the last 6 to 12 months is, you can't rely on a single source and sometimes a single country to supply your very important chemicals that provide, obviously, production and cash flow. So certainly, I think we've learned from that mistake. Maybe during COVID in April 2020, when the borders were closed and we managed to get supply into the country, we were confident that we wouldn't be affected. Certainly we were, and the whole world is. This isn't a Steppe Gold issue. It's a global supply chain issue, and in Mongolia, it's affecting Mongolians in many ways, even in hospitals for chemicals that are required or and agents required there. So it's certainly not just to us, but I think what we've learned is to have multiple sources and suppliers. So I'd rather have oversupply than undersupply going forward, and so we have looked at the surrounding countries, including Russia, obviously, and Kazakhstan, and so border can open up in days in China, and we'll have it in a week. If not, we can have it in a few weeks. Hopefully, we're hopeful coming from the other options, and I think going forward, all those options will remain open so that we can continue to have no interruptions in the future.
Great, thank you. Harry's asking, how much of the CapEx do you expect to fund from heap leach activity cash flow, and how much from financing?
Well, I think we we'll see. I think, a bit of both. I think obviously it makes sense to use debt capital where prudent. So we have options. I mean, if you look at the way the study's being built, obviously the study's being built on an unlevered basis. So, it assumes 100% equity as most studies do. We plan to use a prudent amount of debt. So I'd say it's a combination of debt, operating cash flow, and probably some equity issuance at some point in the future.
Great, thank you.
We generate. We estimate in the study that we'll generate about $80 million of EBITDA in the next 2 years. That's what the study shows. So 128 million of capex, 80 million of cash flow. It shows that we have we can put a meaningful dent in that. But as Anil's mentioned and I've mentioned as well, we are well advanced on some debt conversations, and so it'll be a combination of all three of those capital sources.
All right, thank you. Another question from Harry here. How do you get concentrate to port? Are you close to railways, or do you need to truck it all out?
It'll likely be trucked. As I mentioned, we're about 150 kilometres from the Chinese border, where we have there's an existing trade route. As I say, 40 kilometres from our project, where there's another quite similar mine partly owned by the Chinese and the Mongolians. Is already essentially an existing inland port and a well-established trade route for concentrates through to China.
Thank you. Our next question is, are there significant byproduct credits from the gold mining operation?
There's only byproduct credits in the oxide. So in the next 2 years, we have, a reasonably meaningful, we estimate, I think, 300,000 ounces of silver next year. So, it's not a game changer. Half of our silver goes triple flag. So, it's not a meaningful number, but there are some small byproduct credits in the oxides. Obviously, there are no byproduct credits per se in the fresh rock phase until we maybe look at our at releasing the remainder of the gold that's unrecovered after the flotation circuit.
Thank you. So with the harsher winter climate coming up in Mongolia, what does this mean for production? And even if the Chinese borders opened up today, what would that mean?
Yeah, so I'll jump in first. So yeah, I think we confirmed we do have the boiler house fully installed now, which allows us to have better recoveries during the winter, in the harsh winters that we have in Mongolia. But given the current situation, we can't control when cyanide will arrive. If it arrives in 1 week or 6 weeks. So assuming the latter, we're in winter, it's going to be minus 30 plus probably at that time. And we'll make a decision at that point if it makes any sense to restart production in that harsh of a climate, or we have that inventory build up. We have the cyanide. We've never had any operational issues in getting gold out from that stockpile, from the cells once the ore is on the pad. So we can just defer that production restart till the winter thaw, which usually happens end of February or March. And I think that's when we'd restart if we couldn't make a decision to get the product online in country imminently. I don't know if Greg or Jeremy have any other comments on that. But.
Yeah, I agree with that, Anil. So I think it's depending on the timing of it, and then the decision we made, based on when it actually does arrive.
All right, thank you so much. So our next question is, what is happening with the Mongolian stock exchange listing?
Yeah, so we were approved to list earlier in the summer with a fixed price already determined, which we're currently not at that price. We're 20%, I think, lower than that fixed price. So the options there, again, will be dependent. That was an approved listing on the Mongolian Stock Exchange at that price within a 6-month period. We'll hit that 6 months in December. Obviously, news like today, and again, and going back to the value we've created in the last year, we can't control the market, and the market will always dictate the price of our equities, and it will correct whenever it decides to, and we'll close that valuation gap. Certainly, it hasn't closed yet, But if it made sense and we were able to, we could, again, we could hit that at the end of the year, but most probably that will be pushed into the new year as well. These supply chain issues have deferred, those things. It just makes sense to list on stronger footing. And so if we say we're a producer, let's make sure we're in production when we list on another exchange. And so, if it doesn't happen in December, if we haven't restarted production, then I think we'll revisit it, in late Q1, early Q2. Certainly, intention is to obviously list there. That wasn't really a capital raise or a financing listing. We were capitalizing that listing with a circa $1.5 million US raise, so not very dilutive by any means, but a way to obviously capitalize that listing. But it was a great way to get more local investors, as support and have the ability to own an asset in their own country. So the intention is certainly to list. Like I said, it could be December. If not, it's most likely pushed to Q2.
Thank you. Kujil is asking, what about the capacity of phase 2 process plant? Are the grades of lead and zinc concentrates planned?
So what are the grades? I mean, the grades are on the chart there. And the process plant capacity, it's costed out at 2.2 million tons of processed ore. And the grades 0.46, 0.78 zinc, 1.14 grams per ton gold, and 11.18 silver.
Great.
I mean, this is a very simple flow sheet. That's sort of why the main reason why we decided not to put the CIP into the flow sheet. We wanted to sort of keep it simple at this point. And we got sort of at 79% recoveries, and we have a very profitable and robust project. So, certainly over the coming days, hopefully the market will understand that.
And just to add, I guess we have the ability, the production capacity exists to go beyond the 100,000 ounces a year on a gold equivalent production. So, as we add in Mung deposit, as we add more ounces into the mine plan from Mung and ATO, and maybe some new satellite discoveries or deposits on the same license, you could still have a 10-year mine life and grow that to 125 to 150,000 ounces on a gold equivalent basis, or have a 15-year mine life and have that production increase. So we're not going to be constrained at 100,000 ounces, I guess, with the current build out. So that there is some excess capacity to grow that production on a yearly basis.
Great, thank you. And as a reminder, a copy of this presentation is available for download under the handouts tab. So be sure to download that before we close out. Our last question here is, will you be having another shareholder update before the end of the year?
Yes, ideally, the close off the year, where we're in October now. If it makes sense and people are willing to hear from us, we can do something in early December to close off the year. It's hopefully at not just a higher share price, but some other further advancements and milestones and catalysts that we have in the pipeline in very short order. So we expect November to be very busy with some additional news, and we're happy to talk to our investors before the year end to talk about that and reiterate what we're planning to accomplish in 2022.
Absolutely. Well, I'm looking forward to it. Thank you so much, Anil, and thank you, Jeremy and Greg, for waking up at 4 a.m. for this. Obviously, thank you for taking us through our presentation and the Q&A, and for everyone who joined and submitted great questions. If you do think of another question after this summit, feel free to contact Steppe Gold directly, and you can find more information on their website, steppegold.com. And of course, this summit has been recorded, and you can watch it again on 6.com afterwards. But before we close out, I'll just pass it back to you, Anil, for any final words.
Thanks, Tasha, and thank you everyone again for attending. And of course, my colleagues in Mongolia waking up 4 a.m. To attend. It shows you, I think, how important we see this news and how to obviously present it. Again, any questions that we were unable to answer today, we're always available and readily accessible, easily accessible to answer any questions.